Hi everyone, today let's take a look at the unemployment data, then we'll take a quick look at the charts ahead of this weekend's video. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So jobs growth totaled only 114,000 in July, unemployment rate rose to 4.3, much higher than expected. I kind of expected a 4.2, but 4.3 even higher than I expected and much higher than expectations at 4.1. Average hourly earnings rose 0.2, which is 3.6% from a year ago. Both figures were below expectations at 0.3 and 3.7. Healthcare leading payrolls there at 55,000. Construction declined 25,000. Government declined 17,000. And then warehouse down 14,000. And you can see that jobs data here. Monthly creations down to 114. And this has been steadily declining. You can see back in March, still around 310. Had a terrible month there, recouped a little bit, and now we're back down to that terrible month level. And then looking at that unemployment rate, you can see we were hovering around 3.5, 3.6, dipped down to 3.4 briefly, rallied up to 3.9, and now we're up to 4.3. Seems like we're going to continue to rally here on the unemployment rate, which obviously is not good for economic conditions. While we're seeing that average hourly earnings decrease, makes sense. Less people are employed, means there are more people looking for jobs. And then this brings into play the SAMS rule, which means the economy is likely headed for recession now, when the 3-month average of jobless levels is 0.5% higher than the 12-month low. That is when we start to trigger that rule. Again, this doesn't necessarily mean a recession is going to happen. It is signaling a slowdown, but signals are what we have to go off of until it becomes a reality, and this is showing that it can potentially become a reality. The other point here is that Jerome Powell is very likely to cut in September. He was quite dovish in his most recent FOMC, and he kept saying that the economy was solid, but now we are seeing that that is not necessarily so solid. Moving over to fear and greed, we're down to a 27 from a 39, continues to rocket downwards. We're getting into some of those levels where markets tend to bottom. You can see back here in October, we were down from that 30 to 21 area, and we're already there around 27, so we're in the zone. Doesn't mean we're going to bounce immediately. You can see we got here in September, and then it wasn't till the end of October before we rallied. So that was a full month at these levels. So just now getting here, but that is where we tend to see bottoms. Momentum all the way into fear now. Strength still hovering on the SMA Breadth, starting to roll down. We talked about that yesterday. Put call ratio, extreme fear continues to rally. I think this is probably going to go higher, potentially towards that 1 area. And then volatility spiked massive. We've been talking about that potentially happening. VIX at a 23, 22.5 was the level we talked about. And then safe haven demand cratering, junk bond demand cratering. People are trying to buy up those bonds before the yields go away. Moving over to the economic data, you can see that 0.2 versus 0.3, 3.6 versus 3.7. Previous number actually was revised down as well from 3.9 to 3.8. Non-farm payrolls way below expectations. Unemployment rate way above expectations. Private payrolls also below expectations. So jobs market weakening significantly today. Moving over to max pain, you can see 1.1 million options, put call ratio very low at 1.59. We've been seeing that well above the 3 level, but now it's cratered quite a bit. Bottom of the calls was 539, so we were way below that level. Very bearish finish. We'll take a look at max pain for next week in the Sunday video. Moving over to the charts, you can see the last 2 days have been a dumpster fire, down 1.4 and then 1.8% here on the S&Ps. You can see momentum back to bearish, huge volume, gapped right through all of these levels. Short-term EMAs there at 542, and then trend line here 537, gap through all of that right to the 535 level. And then fell, almost touched my 527.35 area, closed above 531.47, so that's your current support. After hours, it's falling a little bit to that. Overall, still a bearish trend. We'll see how this plays. 144 EMA sitting all the way down at 518.65. Structurally still very bearish, but it is absolutely very extended. You can see that first candle of the day on the hourly got down to a 21.37 level. Super bearish on the RSI. You can see you actually held some slightly higher lows through the trading session, and then the end of day candle was slightly bullish. So see if that has any strength. Got back above 531, and that's what you're trading off of for now. And then looking at the Tasty charts here on the 4-hour, you can see we are almost at that upper ATR band. I thought we would tag it, came up just short, wicked the highs briefly, and then sold all the way down to this lowest ATR over the past couple candles, past 2 days really. You can see we're back into bearish conditions. That broke here at 541, and then we're at that lowest ATR band that's at 530.92. So we're already at a zone of support. You would expect this fall to slow at least a little bit bit, just like we saw here, hit the level, grind slowly lower before we start to see a consolidation and push. So definitely extended here. Could see just some short-term wicks, but wouldn't expect a change of structure. And then moving over to the NASDAQ here, you can see that 2 days of fall, held the level 446.66, touched that level multiple times, found a little bit of gain. I was watching some structure in here. We're right at that level now. You can see quite a lot of volume happening over this day. And then you can see that 144 EMA. That's really what I'm watching. So 447.30, that's the zone. We're right there after hours. This zone needs to hold. If we did get a gap down, gap up, that could be interesting. I don't really think that's going to happen, but it's certainly possible. Look at this volume ramping. RSI, we're almost to oversold conditions there at a 35.29. Again, still very bearish, falling to that lowest EMA, but definitely extended in the short term. Moving over to the Russell and the Dow, both of these were a bit of a dumpster fire, 3.54 and 1.51%. Huge gap. Really didn't fall on the session, but big gap down on the unemployment news. Hit the 55 EMA, actually kind of held that at 208. That's kind of where we were looking anyway. Thought maybe this trend would do a little bit more at 213.92 or the 212 level could be interesting. But huge momentum to the bear side, RSI falling quite a lot. And it fell $7.66, so big move there. And then looking at the Dow, gap through the level, gap through the short-term EMAs, hit the 55 there at 395.16, cut right through the 398 level. So at this point, 55 EMA could hold. Well, the next one is 392.44. Moving over to the Mag 7, you can see very similar to the Russell actually, with the gap down and doji falling a little bit after hours. Touched the trend, touched the level to 49.41. Momentum bearish, RSI bearish, really no change to the overall structure, but it did hold up a little bit better than some of the others. Moving over to Apple and Microsoft, Apple hanging in there, positive on the day, 0.69, big wick to the 21 EMA, got all the way up to 224.80 at one point, closed around 219.82, so wasn't able to hold any of those gains, closed below the trend, but still way better than markets, momentum still hanging in there, volumes hanging in there. RSI still slightly bearish, but still much better than markets. And then you got Microsoft down 2%, just barely missed that 200 SMA. At this point, you assume it's going to touch it at least once. 403.82 is the level. The low of day was 404.34. Might come up a little bit, touch that level Monday. We'll see how it plays. Below that, you got 394.22. Moving over to Amazon and Meta, you can see both of these were down 1.93 and 8.78 for Meta and Amazon respectively. Meta gap down and doji below the level. 21 EMA would be your support there at 490.10. Momentum still bullish, RSI still bullish off of that strong earnings. Think this is going to hang in there. And then looking at Amazon, not so good here. 8.78%, almost hit my 159.89 level. Gapped through all of these levels below the 200, huge volume, RSI, very bearish, momentum bearish. Everything looks bad here on Amazon. Doesn't mean you can't see a short-term bounce. The low of day was 160.55, and then we finished at 167. So there was a decent bounce on the day, and it is technically above this 167.06 level. So interesting there, but I wouldn't get too excited. Still looks bearish to me. Moving over to Staples and discretionary, this is the place to be. Staples up 0.88. We've been watching this headed towards that 79.90 level. Seems like we're going to get there. Came up just short today. Momentum bullish, RSI bullish. Everything looks good here on the indicators for another push to that next level. And then discretionaries, obviously we are risk off. Gap through a bunch of levels. Held the 200 just barely at 179.55. Also touched that next level at 174.76. If that breaks, 170.68 is my next level. And that is going back to the lows from 22 and 19 April. Moving over to utilities and oil and gas. Utilities positive on the day, 0.16. Touched that next level, pulled back from there. So still very much a bullish structure, momentum bullish, RSI bullish. And then oil and gas got absolutely destroyed. So I got huge losses there, down 5.11%, 7.25 on the move, broke the 135 level. Fortunately, most of this fell during the session, but still not great. Let's go ahead and start to extend out these downtrend lines. We're back into this range here. You can see we're actually below it, so your next support would be 127.99. Talked about this being a critical zone. Once that broke, sure enough, it sold off a bunch. Huge volume, huge momentum, big selling action here on oil and gas. Moving over to breadth here, we got 20 and 50-day breadth, both of these cratering as you would expect. You can see both of them making a slightly lower low. 50-day breadth, a much lower low from this previous. Momentum bearish, RSI bearish on both of these. Everything looks bad. You would expect that to continue into the Monday session. Moving over to the dollar, as you would expect, this cratered on the weak jobs data. Need a strong yield for the strong dollar. Weak unemployment data pushes yields lower and pushes the dollar lower. So 102.98 is the next level. Momentum bearish, RSI bearish. You also got a little bit of trend support just below that, 102.87. So we'll see if this zone holds. Overall bearish structure with a high, lower, lower, low. Now with that most recent move, let's go ahead and extend out that trend line. Not really that close to that yet. Maybe a parallel line here. Not really that close to that yet either. So that would put you down around that 102 zone. Moving over to bonds, as you would expect, J&K cratered. Big gap down, big fall, broke 94.82. 55 EMA sitting there at 94.62. And then TLT, massive day, 3.12%. Got through the level, pushed right to the trend. Above that, you have 100.05. Now we're getting into levels we haven't seen since all the way back here at the end of December. Seems like we're going to get there again. We're right here at this wick high from February. It seems like we're pushing. Again, 100 is the next price target. Moving over to volatility, both of these are spiking as you would expect. Move index spiking all the way up to 112, way above these previous highs. Volatility across the board spiking. And you can see the VIX got all the way up to a 29.66. Huge move there, way above what I expected. The level I was looking at was 22.50. Now we're getting into these levels we haven't seen since back here in March of 23. So we'll see if that's an interesting zone. Probably need to add some levels here. You don't see these super often. So 29.5 right there at the March high. Interesting zone. And looking at that a little closer, you can see we did throw many wicks to that level. We got here on the 10th and we didn't leave this zone until the 20th. So we can stay elevated for a while and we'll see what happens on this most recent big wick to that level. Moving over to my accounts, obviously I lost a bunch of money as you would expect. I did okay in my main account. I put on some bearish positions and those turned a bit of a profit. In my IRA, obviously I got cleaned. 750 on that IWM position, mitigated some of that. And then I had that XOP position, obviously got cleaned on that one. So lost a bunch of money. Overall, for what it was, not terrible. NASDAQ down 2.5%. I was down about 1%. Not great, but not terrible. Let me know down in the comment section what you thought of the unemployment data and what you think of markets. How extended is too extended before we start to see some relief rallies? Markets have abysmal, but of course they can always get worse. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.